Hello there, Dana here with your options trading recap for the week of April the 21st. This trade recap demonstrates the bearish engulfing strategy on the half day. We received this signal on SPY, the S&P 500 ETF, on Wednesday afternoon, April the 16th. So we will walk through the various components of this trade. So you see the signal here on April the 16th. Based upon this strategy, if we receive confirmation on the next trading day, the first target would be $520.29. The second target would be $510.93. This is based upon the probability for this strategy that the price of SPY will continue to decrease and that bearish engulfing signal is a potential sign of further decrease in the price of SPY. So let's see how this trade unfolded for us. On the next trading day, April the 17th, we received confirmation when the price of SPY opened in between 50% of our signal and the first target of this trade. Specifically, $527.66 was the opening price for SPY. At the open and upon this confirmation, I purchased and entered this trade a 527 strike price, a put that was on average selling for $498. The expiration date was April the 21st, 2025. I purchased the put because, again, this strategy suggests that there will be continued downward price movement in SPY. For my trading strategy, I purchase a put whenever I am trying to capture downward price movement. Let's see how the trade unfolded. We did not reach target on April the 17th. The cash market was not open on April the 18th due to a holiday, so I chose to hold this position over the weekend, the long weekend, because my stop loss had not been violated. Let's see what happened on Monday, April the 21st. On April the 21st, SPY decreased in price and gapped down to meet our first target. At this point, at the first target, these contracts were selling at an average of $975 per contract. The same morning, the morning of April 21st, the price of SPY continued to decrease to meet our second target, and the contracts at that point were selling for an average of $1,766 per contract. You can do that math. If you exited all of your position at the first target, you are in profit about $477 or a 95% return on your investment before taxes and fees. If you chose to hold until the second target, you are in profit $1,268 or over 250% return on your investment before taxes and fees. The takeaway here is for options trading is to be able to identify a clear signal that you have back tested. Knowing the confirmation, knowing your targets, your stop loss rules, and your plan. When you identify those components, you will be on your way to becoming a consistently profitable trader. I hope this has been helpful to you. If it has been, please like, share, and subscribe. Until the next time, take good care. Goodbye.